They've been taken seriously and some of them are acted upon. So, particularly in terms of credit to MSME, I think repeatedly we talk about various forums. I think I myself am member in half a dozen forums where how to increase credit to MSMEs. Similarly, the financial inclusion is also a theme which is widely discussed. But let me tell you, these themes are very seriously pursued by every stakeholder in the system. And if you see historical movement of the financial inclusion in this country, is unparalleled. Nowhere in the globe this kind of financial inclusion has been achieved. Similarly, in terms of MSME lending, in the last 5 years, we have got the new confidence. Mainstream banks have got new confidence in lending to MSME because of the digital data and many other infrastructure which is available. So against this backdrop, there is a need to deliberate and set direction for achieving the common goal for Viksit Bharat 2047. I agree with Mr. Venkatraman when he said this is a very powerful aspiration and a very tangible aspiration. We're not thinking in the air, right? We have, and then a lot of elements converge to achieve this objective. And I remember Hon'ble FM once in our meetings I mentioned, when you're talking about Viksit Bharat 2047, you don't talk about that in 2045. You talk as of yesterday and start the building blocks towards that 2047. If you see, I think this is one theme which really caught up with every one of us in the country in terms of working towards Viksit Bharat. And I have seen many events and conferences focusing on this theme and trying to, in their respective area, what needs to be done towards that. So, but today, while the government of India and the regulators are all working, creating a very positive narrative towards the growth-oriented activities, there have been some challenges, very serious challenges, both in terms of global uncertainties, tariff-related uncertainties, and we have had unprecedented COVID. We have crossed. I think it has shown, demonstrated the resilience which India is capable of. I think we have to build on that resilience and take a new path. A few suggestions. I don't want to really get into the risks associated with this. There are quite a few in terms of availability, access. When we talk about financial inclusion, why we have made the banking accessible to the millions of people today, still the credit is a challenge, insurance is a challenge, investment is a challenge. How do we move them towards those objectives is also something what we have to work on the financial inclusion space. A few suggestions. Ashish also mentioned in terms of the reskilling our own people, not necessarily in the banking sector. I think it is across the financial sectors what we believe. While the technology is disruptive and the technology adoption is increased within the bank, what we have to focus in terms of change management. How do we prepare our people to deliver these technologies? Even if you are rolling out a wonderful mobile applications and neither your customers nor your employees are able to understand what this application for, then we are failing in our technology adoption. I think the reskilling and reshaping our employee orientation is also extremely important. A few suggestions before I request Mr. Nagaraj to come. One is the credit to GDP ratio. We keep on talking about it. I think while it's been on the increasing trend, we are currently about 55%, might increase significantly to 64% by 2047. These numbers necessitate a shift in systemic jurisprudence, aligning with the tech-first mindset, an attitude that incubates innovation. Also, the fringe benefits of massive financialization at scale, front-led by banks, should help create an inclusive and progressive society, helping communities in their financial well-being. National financial grid. A couple of ideas I'll leave with you. I think some work is done in some form. Whether we can create a national financial grid that connects all the critical elements, credit bureaus, fraud registries, eKYC facilities, UPI and account aggregator frameworks. While ULI is a right move towards that, probably the ULI itself can transform to the national financial grid is one unified open access infrastructure layer that can be leveraged across the ecosystem. As part of that, embed a shared digital infrastructure for fraud and risk management. For many of you who may not be following, we would like to thank both the Department of Financial Services and the Reserve Bank of India for an unprecedented effort. I think we will succeed in this. I head the committee by setting up Indian Digital Payment Intelligence Corporation. I think you might have read about it, IDPIC. This is a shared infrastructure company similar to what NPCI done for the payment space. We would like to create an infrastructure company, intelligence infrastructure company, which enables intelligence sharing on the real-time basis among the banks, among the participants in the financial system, so that the customer protection from the digital frauds can be achieved. I think this is one of the most ambitious projects, as ambitious as UPI, if not more, that nobody in the world have ever attempted. I think we hope to succeed in that. And this shared digital infrastructure for fraud risk management can also be combined with national financial grid is something what we need to look at. And if we add in AI-powered anomaly detection that works across entities, we can build a collective shield for the industry. Millions of deserving small businesses still struggle. While we keep telling that we are growing currently in the MSME space, the banking industry as a whole growing at 17 to 18%. But the unmet demand of small enterprises, small businesses is still there. While they are being catered to by many in non-formal banking or financial sector, we need to bring them in. But even those people who already are accessing the formal system, I think we can think about, building a digital twin for every MSME. Today, SBI has introduced what is called Business Rule Engine for MSME lending, integrating the data across GST, IT, account statement, and able to give financial approval for an enterprise within 10 to 15 minutes approval. But a lot of people still do not have these data elements available. What is those digital twin we can create for every small enterprise which is into the formal ecosystem? And so that, it's not only SBI, there are hundreds of financial institutions which can access this digital twin depending on their risk appetite and cost of funding can be extending this. So this will essentially a secure real-time digital financial identity that captures their key financial data points. As I mentioned, GST returns, income tax filings, banking history, utility payments, and invoice flows. This digital consolidated footprint would enable any bank, NBFC, or insurer to access validated data and instantly assess eligibility for loans, insurance, or even government schemes. I think this would transform MSME financing from relationship-based to data-driven, real-time underwriting, leveling the playing field for millions of entrepreneurs across Bharat. Just to conclude, I think we need to focus on the 4 I's: infrastructure, inclusivity, innovation, and intelligence. They should accomplish a sustainable growth over the long term, while we need to remain sanguine of changes and challenges that may open new vistas of opportunities. Our collective endeavor will have to continue the journey, surpassing each milestone with fortitude, forbearance, and brevity, with audacity of hope. Thank you very much.
Thank you. Thank you very much, Mr. Setty. Thanks for that extremely useful presentation. And as you said, in your presentation and as you in your role as chairman of SBI, which is the largest, of course, banking institution, our banking committee at CI is also very complex, diverse views, different aspirations, different people coming to you to take different opinions. So it is complicated, and thanks for also leading that so very ably. Because of your heft, it has been possible. Thank you. Indeed, appreciate that. But you continue actually to strengthen as a catalyst our economic growth very, very strongly, touching upon each and every individual, if I may say, from the largest companies to the smallest, to the farmers, to the startups, to everyone else. So it's great that you really brought in a perspective just now, which touches it all. Thank you once again. With that, ladies and gentlemen, it's my pleasure and really honor to invite Shri M. Nagaraju, the Secretary, DFS, uh, who has really very closely chaired the summit and has spared his time coming over, as I had mentioned earlier. But again, someone who has transformed DFS, if I may say, from routine reviews into someone who it is to powerful instrument into powerful instruments of national priority. The way you have spoken earlier many a times, weaving cybersecurity, customer service, operational resilience, financial soundness into single and a cohesive agenda for our banks. This has been just a great journey with you. And there are many schemes that you have rejuvenated in many manners. I mean, be it Jandan to Mudra, from social security nets to Stand Up India. Quite, one can go on, but it's your leadership has a lot of value to this group in present today in this hall in Bombay. And with that, may I request you to kindly give your address, please.
Thank you for this kind introduction. Namaskar, Mr. Banerjee, DG CII, Mr. C.S. Setty, Chairman SBI, and also I can use his other designation, President Designate CII, and distinguished leaders of the banking and BFSI sector, and insurance, and from industry, and also colleagues, and ladies and gentlemen. It's my immense pleasure actually to participate. Since the morning, I was part of a couple of closed door sessions, what CIA calls closed door sessions, so that is Chatham rules. We speak frankly, candidly to each other to understand and also to learn from each other. I think that's what we have done since morning. I'm thankful to CII for taking this initiative of assembling the leaders of BFSI sector so that we have a chance to connect and form partnerships and also take forward the sector so that we will all be in a position to reach the goals of Viksit Bharat 2047. To begin with, let me offer a brief reflection on India's current sector, current status. You know, the past decade has been one of the most transformational in the BFSI. I think all of you are aware what was 10 years ago and what is today. I think anyone looks back at the numbers, the magnitude, the kind of schemes we have developed, I think it's a really, truly transformational. In fact, after a few years down the lane, maybe of some years, if somebody writes on how the financial sector has actually progressed, I think these 10 years would be marked as a watershed in the history of our country. But the way the number of schemes, systems were broken and new systems were built, regulations were issued, and we all actually come together. That I think that is all visible today. Now we have today BFSI sector stands very robust and credible and also globally respected. Our banks have navigated very turbulent times, and now we have increased the capital buffers with our banks. I was talking in the morning, some of our PSBs and private sector banks including, they have anywhere between 17 to 19%. Never. We were always struggling to maintain 12%. but now we have reached more than 17-18%. And sharp decline in the non-performing assets, both gross and net. Again, one of the lowest ever. In fact, I was talking last week when we were discussing, the first quarter net NPA for the public sector banks was 0.52. So this quarter, it has actually declined to 0.48. So each quarter, it's not just one bank. I'm telling you, it's not just one public sector bank, including private sector banks. As a system, as an ecosystem, all these bad indicators have been actually declining. We are much more now responsible. Our systems are good. And the borrowers also, we are selecting good borrowers. And they are also afraid now that if they don't pay their company, they may lose the ownership of the company. So the entire system is actually responding to the changes that has happened in the last 10 years. Now, these are all actually not only good policy making, but also actually growing as an indication of growing sector's maturity, so that we are ready to meet the goals of Viksit Bharat. Now, when we say I think all of you know what that means, Viksit Bharat 2047, getting India to a developed nation state status and having at least minimum $2,000 of per capita income and 30 trillion. But more than that, we need to become a developed country with a developed mentality, maturity, and behavior. I think not just economic sense, but also social and ideological development also is very important. That comes only when we don't feel necessity to pull down each other, but move together as a country. Now, to reach that, BFSI sector will play a very important role, because this remains the primary source of funding for sectors vital to economic transformation, including infrastructure, MSMEs, and healthcare and agriculture. Now, one of the, I think, it's India's pride, how the financial inclusion, Mr. Setty has mentioned, financial inclusion, digital transformation. I think these are the two things, subsectors, which have we all Indians, those who are working in the financial sector, even not working in the financial sector, we all take great pride. The way the last 10 years has transformed the country in these two sectors. The India's financial index reached 67.0 in March 25 from 64.2 last year. Every year, actually, we are improving our India's the financial inclusion. And then I think all of you know, PM Jan-Dhan accounts. Everybody is saying that we lag, now it becomes stagnant. This year, we have reached almost 57 crore accounts. It was used to lag 52, but in the last 1.5 years, we increased to 57 crore. Most of the PSB banks have increased the number, including, I should mention, including the HDFC and S Bank as well as the ICICI. Most of the banks have done very well in financial inclusion. They have a deposits of 2.7 lakh crore, which is unimaginable a few years ago. And then the most important thing, which is always very pleasant thing, is 55.7% of all these accounts are held by women accounts. 55.7. Imagine if there is no financial inclusion, if there is no priority, these women would not have a bank account. And let me tell you, I think maybe many of you are aware, one bank account actually can change the life of a woman in the rural areas. It has such an empowering impact. Now, digital payments revolution, I think it continues to create terrific records everywhere. UPI is now everywhere. In early November 2025, UPI volume stands at 14,102 crore and value at 1,84,000 crore. That is in November. It already accounts for over between 81 to 86% of total digital transactions in India. Total digital transactions. The scale, mostly little more than half of the global real-time payment volumes, underscores UPI's affordability and reach. 89% of Indian adults hold a financial account. That is an increase from 53% in 2011. Now, this new universal account ownership is driven by, of course, PMJDY, eKYC, mobile bank, a lot of things we have done as a sector. Now, the point I'm making is these initiatives, PMJDY, UPA, and JAM, are actually deepening financial inclusion, usage, while reducing costs. And governments continue to focus on financial literacy and expanding rural access I hope, will sustain this momentum. Now, coming to the credit flow to MSME finance and inclusive growth, the bank's lending to MSMEs accelerated to, on year, 14.16%, with an absolute increase from 28 lakh crore in 2024, the last year, to 32 lakh crore this year, 2025. Imagine the increase between the 2 years. During the same period, year-on-year growth in total advance of SCBs was 11.63. This is higher than the all other parameters. MSME, I think we all talked. I think we have recently announced. The government has announced credit guarantee for exporters, for MSMEs, and we also gave something from the RBI. RBI has also announced moratorium, and the government also announced the export mission for export mission, especially to support the MSMEs. Now, from the government side, we all are on one page to support as many as possible MSMEs, both in terms of credit and also hand-holding. Mudra Yojana, I think many of you may be knowing, I think 53.39 crore loans, totaling 37 lakh crore, have been sanctioned since inception. This is till March this year. Now, most of the Mudra loans, again, it is almost about 52% of Mudra loans went to women, not men. Mudra loans, women actually took on their own name the loans. Imagine what would have done it. Actually, they would have started small enterprise, or done some self-employment, or participated in other financial initiatives. Similarly, PM Swanidhi, which we recently reformed, PM Swanidhi 2.0. PM Swanidhi 2.10, we sanctioned 97 lakh loans worth 14,224 crore to 68 lakh street vendors. Imagine street vendors without any guarantee getting a loans. That is unimaginable. Actually, this is one of the most wonderful schemes in the world. And these are all small loans. In fact, when I asked one of the bank chairman, SBI chairman, I think, told me, sir, Swanidhi is very easy to sanction, sir, because they are very small loans, 10 to 15,000. We just sanction. When they apply, most of the loans get sanctioned. In fact, imagine somebody living in the streets, in small towns and cities, getting loan without any guarantee and starting something and able to take care of his family. And then the biggest thing is we have so much thing, a lot of people come to the cities, but while the father and mother may be working, but children will be going to the schools. In fact, that kind of access to quality education will actually change the life of the children for next generation. This is how our country actually progresses. Now, MSME liquidity, to use the MSME liquidity, we also have TREDs. I think all of you know. As of October 25, TRED platforms collectively finance over 7 lakh crore by discounting 2.03 crore invoices, a 72% surge in value over October 24. Everybody thinks that we are not doing, TREDs is not doing well. In the last 1 year, there is a growth of 72% on the TREDs for discounting for the MSMEs. This FinTech-driven solution ensures small suppliers get paid faster by allowing them to auction their receivables to banks and NBFCs. In fact, the government has also mandated all large corporates with a turnover of 250 crore to onboard into TREDs by March 2025, so that we can widen adoption, which will further bridge the 25 lakh crore MSME credit gap. Now, the government and RBI, we both together have strengthened credit guarantees and PSL for MSMEs, resulting in double-digit growth in bank credit to micro and small industries in recent years. I think we all of us know, like other initiatives we have taken, Stand Up India, Emergency Credit Line Guarantee Scheme during the COVID, they all helped large number of people, MSMEs, and exporters also. Now, banking sector, when we come to the banking sector, I have mentioned now from the peak of 2.2, we have actually our GNP is 2.2 compared to 11.2 in the year 2018, and net also declined. So I'm not going to talk about this thing. I think last quarter also public sector banks and private sector banks numbers I've seen, actually they are looking very robust, very accelerating the numbers for everybody, both net profits and net NPAs. Everywhere the numbers are looking very good, and credit growth has been broad-based. Domestic credit growth actually has nearly tripled from 67 lakh crore in March 25 to 181 lakh crore by March 25. PSB alone have seen the global advances rise from 56 lakh crore in 2015 to over 115 lakh crore by September 2025. These are all, they didn't happen on their own. As I told you at the beginning, there is a lot of work done in the manner of reforms undertaken in the financial sector, both by the RBI, regulators, the government, and the bank themselves. And then ease reform that was implemented by the banks. Now we are going under the ease 8.0. The large number of reforms we have undertaken under the ease actually has transferred most of the banks now. In fact, some of my friends keep telling me their experience in the banking industry in the recent past actually completely changed. Because unlike in the past, I think anybody can do all kinds of transactions sitting at home through on mobile everywhere. Now, similarly, when I come to the NBFC, it has also undergone significant strengthening. Now, the scale-based regulatory framework introduced by RBI and supported by DFS has really brought greater discipline, transparency, and risk sensitivity to the sector. Today, NBFCs have emerged as the indispensable partners in MSME credit, vehicle finance, microfinance, and of course, consumer lending. Housing finance companies are supporting both urban and affordable housing aspirations, complementing the efforts of banks and government programs. Insurance is one priority area for in fact, government of course is a priority area, but actually I feel that it should be a priority for the society as a whole. We're still far away to reach the global standards in terms of both premium as well as coverage. Now, that is one area where a lot of capital can be mobilized for financing the infrastructure for the long-term development of the country. Insurance is one. While government also has done well in the sense that the government continues to introduce simpler and low-cost insurance products. Over 2.25 crore enrolled for life under PM Jeevan Jyoti Bima Yojana, 54 crore under PM Suraksha Bima Yojana. Now, Atal Pension Yojana, we have reached 8.3 crore, and APY, about 48% of total Atal Pension Yojana beneficiaries are women. Now, these achievements actually reflect growing awareness and also automation of benefits. We will continue to encourage formal retirement savings for the unorganized sector as well as organized sector. In fact, if you look at it, one thing which is inconsistent for me was the pension. Pension, people who are earning less than 15,000 rupees per month it's mandatory to enroll in the EPF system. But to those who are earning more than 15,000, it's not mandatory. In fact, some of these people in the private sector who are earning more, in fact, I realize that actually they don't have any pension fund, which is very bad. We need to look at it, how do we secure the future of those who earn a little more also, but have secured future, not depending on the children at the time of old age. So that is one segment we left it out. In the healthcare, we left it out the middle. Similarly, here also, those who are actually working in the BFS sector, other sector, earning more than 15,000, that are also left out from the pension. Now, we would like to fill that gap. We want to do that. Infrastructure financing, I think today, I think many of you must have spoken on how the government has been very consistent in supporting infrastructure financing. Last year budget 25-26, the total infrastructure budget is almost 20 lakh crore. That is higher than 16.4 over the revised budget of 24-25. Of this, capital outlay is being stepped up sharply. Central capex will rise to 5.5 of GDP from 5.2 in the current year. Beyond budgetary spending, a host of enabling reforms and initiatives have been taken. In fact, which includes NAFID. I think all of you know, NAFID has introduced the partial credit guarantee scheme, and we launched it last month, I think. Last month, we launched it. This will help lower-rated infrastructure issuers to improve their credit ratings and tap the bond market for funds. So therefore, by enhancing credit and reducing risk, PC will unlock fresh capital for infrastructure and reduce over-reliance on traditional banking lending, thereby diversifying the risk across the financial system. Similarly, to crowding private capital, the government has re-energized asset monetization, I think you know, and government also approved a 25,000 crore maritime development fund for a long-term credit to ships, to build ships and ports. And then last year budget also announced Urban Challenge Fund with 1 lakh crore, which will finance city infrastructure projects through several innovative mechanisms. And center also is lending 1.5 lakh crore to states for capital expenditure reforms. These reforms encourages reforms in taxation, power distribution, and land use while augmenting state-led infrastructure. Now, role of technology in BFSI, I think innovation remains the hallmark of India's financial sector. We are embracing emerging technologies to improve efficiency and security. And all our regulators are also fully on board on improving the technology and harnessing the technological changes. Now, at the heart of this is, of course, digital public infrastructure, Aadhaar-enabled eKYC. That is very important. And the second thing which we did, which is only BFS sector aware, is account aggregator framework. I think we should be again very proud of the innovation we have done on this. Now there are more than 850 financial entities connected to the AA framework, making digital lending faster, cheaper, and more transparent. And 2.61 billion financial accounts are now enabled for consented sharing in the AA framework, and 234 million users have linked accounts on the AA framework. Imagine the kind of information that is available and the kind of data that is available for the country. Now, India's FinTech leadership is now growing, I think, global. I think we should be very happy. Next time some of you visit other countries, you can actually make UPI payments. Currently, we do that in Singapore and UAE, France, Nepal, Bhutan, Mauritius, and Sri Lanka. We are also talking to at least another 7-8 countries. We hope by next year we will have that in place. So our goal is to ensure UPI is available in the first Middle East and East Asia, where large number of Indians there, and then go to Europe. So that UPI will be, and then we are also willing to partner with other providers in the UPI. In the closing, let me tell you, India's financial sector is rising to the Viksit Bharat 2047 challenges, as highlighted. Each piece, that is inclusion, MSME credit, banking reforms, and technology and security, contributes to the larger vision of a developed India. as we progress toward 2047, the financial sector will continue to evolve, becoming more open and technologically advanced, while keeping citizens at the core of every decision. The objective is not only to reach a 30 trillion economy, but also build a financially confident and empowered society. In the spirit of Sabka Saath, Sabka Vikas, let us work together so that India's financial system empowers every entrepreneur and every citizen. Thank you very much for your attention. Thank you.
Thank you very much, Secretary. I think we couldn't have asked for more. I mean, the phenomenal spectrum that you covered, the huge uh, number of areas where, of course, I mentioned just before you spoke about how you have transformed some of the present schemes and made it much more usable, reachable, and much more contemporary. And I think you brought it out with so much of clarity. You connected with, again, every sections of the sector, the BFSI sector and beyond. Indeed transformative. But what was noted by all was the clarity in which with which you said. But I must again thank you for one more thing, is that the speech that you gave means that you took a lot of time out to prepare for it. And therefore, it's not just your presence, but the homework that you did for coming here really motivates us that you really took that time out to do that. In a closed door meeting, I said that you are always candid at closed door. I can say that you are very candid even at open door. So, and you had told me, you pointed that out to me, that are you candid only at closed door? So we wanted to clarify first. Really, you touched all stakeholders, and it was a great, I think, high point of the two-day summit that you really brought into. And we had a diversity of, we had the largest bank speaking before you, sir, and we had one, of course, a resilient public sector bank, another, the SEBI chair, the SBI chairman, as well as the CMD of the India. I think that was Mr. Ashish Pandey's points which he brought out, showed the resilience of our public sector banks. And Venkat, again, thanks for that extempore speech that you gave as a long-term patient capital. I think it was again true diversity, and the true diversity, sir, is also reflected in the audience. And I think the IIDA member is also present here. Some of the best of speakers who have spoken over yesterday, and today IIDA's member is also speaking at the summit. And I must also mention the DFS's involvement through your leadership, but JS Ayappan has been so very closely involved in making this summit so very successful. So once again, our heartfelt thanks to you, Mr. Secretary. Heartfelt thanks to you, Chairman SBI, for really leading this, and sincere thanks to all our great participants who've made this very valuable. Lots of inputs, lots of work for us to do. We'll keep turning to the SBI chairman, who leads us into our banking and financial sector work deeply and greatly, in seeing to it that we are able to action it with the different membership. Ladies and gentlemen, once again, thank you, and a huge thanks to our summit chairs. With that, we conclude this session. Over to you, Maru.
Thank you to our eminent speakers. We would now be presenting the mementos, and I would request CB to present the first memento to Shri M. Nagaraju. To Shri C.S. Setty. to Shri Ashish Pandey, and to Mr. N. Venkatram. Thank you all. We shall be starting the panel on insurance shortly. I request everyone to remain seated, please. We are starting the insurance panel shortly. I request everyone to please take your seats.